All the content contained in this webcast is for informational purposes only. The investments and strategies contained in this webcast may not be suitable for you. Please consult your own independent financial advisor before making any investment or trading decisions. Good morning, traders and investors around the world, and welcome to the beginning of the quarter Monday morning edition of premarketinfo.com, where we prepare you not only for the most important hour a day, but for the entire quarter. Well, good morning to you, Dennis. S&P's traded down a little bit after popping in the aftermarkets up to 14.10 and a quarter.
We opened up pretty strong last night, Joel, but we've slowly given it back overnight. European banks a little bit weaker. I'm overly concerned, too. They always run these things up in the last couple days of the quarter, and we were kind of skeptical that maybe there's a little bit of a run-up the last couple of days, and it wouldn't surprise us if, the beginning of the quarter starts and it gives a little bit back. Not saying it's going to do that, but it appears to be what's happening just a little bit this morning.
Well, you remember what happened at the beginning of the last quarter, Dennis, don't you?
We just kept running, Joel. But what happened? You're talking about the very beginning?
I'm talking about the beginning of the year. We opened up, we gapped up, and gapped to the 1250, 1260 level, and here we are at 1400.
It's just been an incredible quarter, but a good year for the market, Joel. It's up 7 or 8%. So when you're up that much, when you're talking, you're up 15. What are we up for the quarter? Did you figure it out on the percentage wise? It's got to be like 15% or something crazy.
I think I've seen it. Depends what benchmark you're using, but 12% pretty much.
Like that is just an incredible quarter. I mean, if you're doing that every, you're going to be up 50% by the end of the year, which seems unreasonable to me. But the market is underinvested, so the path of least resistance has been higher for the entire year so far. So it's hard to call a top on this thing, but you just got to think. Eventually, some people probably could, if there's a little bit of bad news coming out, people could get nervous in a hurry.
Well, as important as that 1250 level was back in January, I think this 1400 in the S&P futures is going to be just important in this quarter. Just to recap the S&Ps, we did hit 1410 and a quarter, kind of busted through the double tops we had midweek. We've sold off to the figure, Dennis, 1400 and a quarter. That's the number we're going to be looking at. So let's move on to the Big Ten. Just real quickly on the ExxonMobil, just had a strong close, follow through, but just, can't get through 87, Dennis.
87's a wall here, Joel. You're right. Just looking at the chart here, you had the double top we talked about before at 87 and a quarter, just above there. Closing near the high, though, on Friday, Joel, 86.73. It's always a good thing when a stock can close near the high. And it hasn't really had any trades this morning here. It's just slightly upward, slightly down in the pre-market. So the 87 to the 87 and a quarter area is definitely going to be the first test if we go into rally mode. If we're to pull back, I think you see some support at this 86 area, Joel.
Yeah, also the major support at the 85 level, Dennis. That's kind of what saved the market on Thursday. Similarly with Chevron Corporation, bounced off its 105 level, pressed up towards 107.5. That's trading up a little bit in the pre-market, but for that thing to go back up to the all-time highs, it's got to get through 108.
108, Joel, you're right. 2 double tops there from last week. That's going to be the resistance area if this thing does go into rally mode, so keep an eye on that number.
Okay, and as 1400 is important to the S&Ps, I think 600 is to Apple, Dennis. We've hit 621 and change. We've pulled back. Now we're just treading right around that 600 level. Talked about some other levels in our weekly outlook, but what really scares me about this stock, Dennis, and we're still 7-8 points away from it, is that there's nothing in the 580s. If this thing gets under 590, it's printing 580.
And I agree. We just had such a run up on this stock. I mean, if this thing really started to roll over, it can just start cutting through handles in a hurry. But it's holding on here. The 600 still acting like a magnet. So I wouldn't say it's over for Apple here, but it definitely was not a good day on Friday, being down 10 points on the day the market was up. So that was the first day in a long time that Apple was really relatively weak to the market, which is always a concern. And here this morning we're only down 2.5, and it's down another $3 here now. So it does look like it's starting to roll over, Joel. And if that ball gets rolling on the downside, you're right, that 578 could be here in a heartbeat.
Well, we're really not market timers here at Pre-Market Info, but if this thing's not trading above 600 by 10:30, I'd say it's in a whole lot of trouble. Just moving out just on the rest of the Big Ten here. A couple interesting things, but just going to close with Johnson & Johnson, Dennis. Bounced off that 64 level, cleared out the size. Lo and behold, we're back here at 66. Do you think we're just going to hold to this 66, take out the 66.32, and move to a new 52-week high? Or you just think it's going to tread water here and go back down to the lower end of the range?
I mean, we've had this is a big run, 3, 4, 5-day move for Johnson & Johnson from just at that low of the range, basically at 64.37. We've ran straight up for 4 days, and you do have that significant double top there at 66.32. So man, you almost think the first shot at that may provide some pretty decent resistance. But it's got momentum right now, and some of these defensive names are coming into play, like they were marching up towards the end of the quarter. It's always interesting, though, because what happens at the end of the quarter is sometimes, like we talk about the window dressing, we talk about different stuff like that. So it may not follow through into the next quarter, because it could just be institutions that wanted to have Johnson & Johnson in their portfolio for the end of the quarter, and all of a sudden, there isn't that significant buying pressure to have it at the beginning of the quarter. So it's hard to say, but I would definitely say the next 2 days of action Johnson & Johnson will be indicative on if we're going to go back to the bottom of that trading range or if we're going to try to break out.
Okay, what do we have for market movers?
Well, Avon Products, Joel, that's your biggest market mover here today. A little company, well, I guess not a little company, but private company, and I think they're based out of France there. Coty making a hostile bid, 23 and a quarter. They made that this morning. The stock actually spiked up to as high as 24.80 in the pre-market, so way, way above the hostile bid price of 23 and a quarter. But then Avon Products just came out here about 10 minutes ago, rejecting the offer, and the stock's been peeling back since then. 23.09 trading right now, but I mean the stock is obviously in play here. So you know what we say, when stocks are in play, technicals go away, Joel. But do you want to do a technical on it anyway?
Well, it filled the gap that it had back in October. Went straight up to that 24.80 level. Now we're peeling back at 23. I guess the only thing I can give on this is a little bit of a fundamental perspective on it. And my wife has this one product that she buys from Avon. And the Avon lady calls and she pays her. And lo and behold, if I don't have $15 cash in my pocket, I have to write a check. So I usually have the $15 cash. They sell a lot of low price stuff. I just, I don't see what the value is in this company. It's been coming. It came straight down. It was under $17, and all of a sudden they want to pay $24 for it. I don't see the value, but that doesn't mean it's not going to get taken over at that price.
Looks like a dang good deal for shareholders, though, when it can rally 20 or 25%. I mean, if I was sitting long that stock,
right,
I'd probably be itching, especially when they give the 23 and a quarter. And it's trading 24.80 in the pre-market. I mean, it was trading 7% above where the hostile bid price was. So people, obviously investors were banking that it might give even a better bid. But that's significant of a pullback. We're down $1.70 now from where it topped out there in the pre-market just an hour ago. So it's going to be volatile, folks. Obviously, it's going to be headline news that's going to drive this thing probably for the next little while, as if they come back with a better bid or
it's a gift.
Yeah, well, it kind of is. So, but you never know. Could be another player out there that even gets interested. You never know in this market.
No way. if you own this thing, if you owned it since October, since the gap down, and they're offering whatever they're offering, 23 and a quarter, trading at 23.11, get the hell out. I mean, do you want to be part of a company named what? Coty or Coty? Some French company? I mean, what are you going to do with that? Get out. Well, that's what I'd say.
Yeah, well, you could be right there, Joel. It's always hard to tell. Like, what's that Kramer saying? He always says, pigs get fat, but hogs get slaughtered. Isn't it something like that? So.
What is it? Bulls make money, bears make money, and pigs get slaughtered.
Yeah, so if you're really greedy, sometimes, that can come back to harm you. But and you can always think back even to the Yahoo. Remember, they kept going for a better price from Microsoft. Better price, better price, better price a couple of years ago there, and you know where that stock is now. So that's something to always keep in mind, too. But at the same time, the stock is in play, so you need to be careful when you're trading this one. Couple well, we got an upgrade on Kohl's, Joel, KSS at JP Morgan, and the stock is trading up a bit here. It has an interesting chart though. We had some a couple tops there. I'm just looking at the chart here. If we go back into mid-February, we were topping out the 52.68 area, but even if we come closer, there was 3 tops here, Joel, in early March that all were very close to each other: 51.49, 51.50, and 51.45. Man, with the 3 tops there, the stock's a buck away from there, but sometimes these things get upgraded, they start to really get some momentum. So you got to think that 51.50 area is going to provide some pretty good resistance here, Joel.
Yeah, I mean, for you channelingstocks.com subscribers, I made 48 to 51.50 has been the range. Wouldn't want to be short or wouldn't look to excellent long until it gets up in that area. Not a lot of volume associated with this move here, so buyer beware. Just float up at 50.57 here in the pre-market, but I have to agree with you, Dennis. This 51.50 is definitely going to be major resistance. And then going to support, you could just go into yesterday's range, use the close, 50.03. If the street doesn't think much of the upgrade, it can hold $50. Look to a slide to Friday's low at 49.59.
Here's an interesting one, Joel. Groupon came out Friday after the bell. They've got some accounting issues over there. Whenever you hear accounting issues, man, I get scared. I think I'm using Kramer here a lot, but he always says counting issues equals sell. Whenever you hear accounting issues, do not own the stock, because the whole problem is once you have accounting issues and you can't believe the books, how do you you can't do valuations, you can't do anything if the books aren't right. So that's the tricky thing. The stock is getting killed here today, down 11%. I mean, here's a stock, not to knock the business model or anything, but it's got an $11 billion market cap as of Friday's close. It's going to be less than that this morning when it opens. But here's a stock that prints online coupons for restaurants. I mean, this sounds pretty duplicatable to me. Like, I don't think they've reinvented the wheel here. Sure, they've got a great following, and give them, props for that. A lot of people use those Groupons, but at the same time, it just doesn't seem to me like it's a sustainable, reinvent the wheel here, $11 billion company. It seems overdone to me too. But then you look at the opposite coin, and if you try to short the stock, it's probably cost you 70 or 80% a year in those borrowing fees to short the thing. So you really can't make money shorting, and you really can't make money buying it. So I don't know if you can even trade something like this other than, on an intraday basis.
It's been stuck in the $16 to $20 ranges. There's someone that definitely shares your opinion up here at $20. It's really having a hard time getting over that. $16 just above that has really been holding up. 16 and a quarter was a low from March 8th. And lo and behold, Dennis, you look at the pre-market and $16 is held. So I think that's a huge level. Below 16, you start to get into the actual lows of the IPO, which is something you got to be cognizant of. 15 and 11 was one low, and then 14.85. So 16's a level, 15's a level. Looking at the pre-market, someone wants out desperately here, just under 17. Been a lot of highs in the upper 16s. Dennis, I kind of share your sentiments on this, but just going back to the fundamentals, talking to my buddy Joe at the sports club, and he works at an iPlace, and they put something out for a coupon, nothing related to insurance. He said within 6 hours, they got 600 people to sign up for this thing.
Wow.
So, yeah, I mean, and you also got to realize, Dennis, that when they sell the coupons and they're bought, the merchant receives part of the revenue as well. It just doesn't all go to Groupon. They get the customer and they get a percentage of the revenue. So the business model is much more than just clipping the coupons. The actual retailer can participate in the money the Groupon
paid ahead of time. The retailer.
Right. So what's going to happen?
It's almost like financing.
What's going to happen is, Groupon initially says, we'll split it with you, or some are 40%. I mean, I'm sure they have different deals with all different retailers. So it's a very, very complicated business model, and I could see why they would have accounting problems.
Yeah,
I mean, it's got to be if you're going to have a different deal for everyone on the street. I mean, at a grocery store, you can't charge a different price to milk to every customer comes in unless they're a huge volume customer. So that's my view on their accounting fraud.
That's a good take. Well, it's not a fraud; it's just accounting issues. So we don't want to
Oh,
put
sorry.
words in. No, but just issues there, obviously, and all those issues you just raised there. I can see the point that there would be probably some accounting issues. Difficult thing to value though, so it's hard to say.
And when it comes to taking accounting advice from me, I took it pass fail, and I got 19 out of 50 on the final, and I passed it. So don't take.
So don't listen to Joel's accounting analysis. May not be as good as some of his technical analysis.
Okay.
Yeah. So other stocks we've got moving here. MHS is actually halted along with Express Scripts, which is ESRX. This deal, they've had a merger on the table for quite some time. There's been rumors that they're going to have some regulatory problems. Both stocks are halted here right now in the pre-market. Haven't heard what the news is going to be, but I'm assuming it's something to do with the regulatory hurdles. There's a lot of other drug companies that are basically, we're saying, or I think in some of the retail are saying that this merger wouldn't be fair. So I think you're going to have, some comments coming out of here and some regulatory issues, probably maybe to be resolved today. So keep an eye on those two stocks, MHS and ESRX. If you want, you can do a quick technical on them, Joel.
I wouldn't be short these stocks, Dennis. I think that the business model of people getting drugs through the mail or prescriptions through the mail, I think eventually it's been weighing on stocks like Walgreens. And so I think this is an excellent business model. From a technical perspective, the street agrees with me. Medco Health Solutions just hit a recent 52-week high at 72.50. Take a look at the other stock. It's had a nice rally as well, so the street is definitely in agreement here. When this kind of news, stocks are halted, talking about mergers. Unless you have a position that you're trying to trade off, you just let the big boys sort out the news.
General Motors here, Joel. They actually are going to report their March sales tomorrow. There's a few smaller headlines here too, but the stock is trading up in the pre-market, so it's getting a decent lift. GM isn't up every day, so I figure we should give it a little props. Seeing we're from the D town here, Motor City, so let's talk about GM for our local listeners. $26 is where it's trading right now after closing at $25.65. So this $26 look pretty critical to me. It's coinciding, and obviously trading in the pre-market there. Takes that out, you got those couple of tops there that we made back in March, Joel. 26. I was trying to grab you the number here. 20. My mouse is not working.
26.58, 26.59.
You got her, Joel. So those are the two numbers that I would look at as if we take out this 26 there. And sometimes these stocks will run into those March sales reports. Obviously, once the March sales come out, then it's fundamental news and it can kind of move either way. But overall, 25 is starting to form a nice base down here, Joel. So I could make an argument this could start to break out and move higher. What do you think?
Yep, I think that's exactly right there, Dennis. The last three, you had the old triple bottom there, 24.94 to 25.11. So 25 is excellent support. Trying to get over this $26 level, and just above that is the double top. So doubt if it's going to see all those numbers today, but those are some excellent points. The big problem with this stock is the short sellers know that the government's long like a zillion shares at 32 in the IPO, so that's an overhang on this stock that eventually the government's going to have to come out of it. So until they can really turn the numbers around, they've been coming out with good numbers, Dennis, and not really rallying that much. So it's hard to get real bullish when they have good numbers and can't muster a major rally.
Well, we're on the theme. Let's give Ford a little bit of action here too this morning, Joel. It's just trading up a couple of cents, 12.49, but the same type of deal. Has a nice double bottom forming on the chart there just from this 12.25 area. We're starting, if we could get above this whole 12.50 like we topped out 12.61, then maybe we make a run for that $13. And $13, now that is a wall. You got the triple top up there. I actually can see the book. I think there's over 1 million shares offered up there. So those high frequency guys, they love to lean on that. If it's to make a run in the next couple weeks to get up to that, I don't think Ford's going to do it in one day. You never know though. Big auto sales, but if they had good numbers. But at the same time, Ford probably going to take a little while to get up to that 13 area. But if it eventually does, there's going to be a wall of high-frequency traders up there selling in front of that 13.
Yeah, I just have to. It's a little bit off the side. I just have to equate this to your GE. It tries to go up, it tries to rally, has guidance, has all these things, and just hits major sellers in the book, and that's why. you can't really imagine a stock like Ford ever going back to 20 again. I mean, there's just the big offers in there. Right now they're at 13. That's the level. It gets above $13 and well, it'll go 13 and a quarter because there'll be more high frequency traders at that level. So 12 to 13 has been the range for almost the entire year. You're smack dab in the middle. So your swing traders wait to short it at 13 or buy it at 12.
That's all I've really got for you from a market mover's perspective here, Joel. What else are you looking at? Is there anything you want to comment? Final comments on the S&P?
Yeah, Dennis, if that 14.10 and a quarter holds, we have a downside target of 13.95.75, which coincides exactly with Friday's low. Still just keeping an eye on this $1,400 level in the S&P, Dennis. It's major support until it's proven otherwise. Getting above those levels, we have Wednesday's Globex high at 14.12 and a quarter. If we can take out the Globex high. And coming down, Dennis, below that 13.95.75, it's really wide open, Dennis, until Thursday's low at 13.86.50. That's our show for today, folks. We hope you get your quarter off to a good start, and we'll be back with you later in the week.